Hello friends, in this video we will discuss about small cap mutual fund from Quant Mutual Fund House. Let us understand some basic information about Quant Mutual Fund House. This mutual fund house was established in the year 1996. The total asset under the management is around 55,807 crores. The official website of this mutual fund is www.quantmutualfund.com. There are more than 74 different varieties of mutual fund is being managed by this Quant Mutual Fund house. Let us start this video by seeing the basic information about this mutual fund. This mutual fund was launched on 1st January 2013. It is an open-ended fund and falls under the category of small cap. The main objective of this mutual fund is to generate capital appreciation by investing in well-diversified portfolio of small cap companies. Let's look into the scheme information. The minimum investment that you need to get invested in this mutual fund via SIP is 1000 rupees. Via lump sum, it would be around 5000 rupees. The expense ratio of this mutual fund is around 0.77% as on January 31st, 2024. The total asset under the management is around 15,664 crores. There is no lock-in period associated with this fund. The benchmark which it is being tracked is Nifty Small Cap 250 Total Return Index. There is an exit load of 1% in case you want to redeem the amount within the 1 year period from the time you started your investment in this mutual fund. From the scheme riskometer perspective, since it is a small cap mutual fund, it falls under the high risk category. So we have to understand that our principal amount will be at high risk. Since the mutual fund is high risk, the return also will be higher in the longer period of time. If you are having appetite to get invested for over 10 years of period, this mutual fund is for you. From the scheme rating perspective, Value Research has given the rating of 4 by analyzing this fund in the long term. Morning Research hasn't given any rating so far for this mutual fund. Let us understand the allocation by market capitalization. Let us start from the large cap perspective. Large cap has got allocation of 21.97%, whereas mid cap has been allocated for 2.33%. The most of the money is being allocated to buy the stocks which falls under the small cap category, which is around 70.8%. As the name suggests, the most of the allocation goes for small cap. In this next section, we will understand the top 5 sectors in this portfolio. It has a energy sector which is having the allocation of 16.13%. Then the financial comes into play which is around 13.13%. Then services which is around 10.14, followed by construction and metals which just under the 10% of allocation. In the next section, we will understand the top 5 companies in this portfolio. Reliance Industry Limited has got the allocation of 9.87%. IRB Infrastructure Developer Limited has got the allocation of 3.86%. Geo Financial is around 3.41, whereas Adani Power and Hindustan Copper falls under the 3.5% range. In the next section, we will understand the absolute return in percentage. If you have invested in this mutual fund in the last 3 months, then you would have got the return of 17.42%. In the last 6 months, it would have given the return of around 66.95%. When you consider the last 1 year, it would have given the return of 205.29%. To make the calculation easier, I have given the calculation for the amount of 10,000 invested as lump sum. Let us understand how much money we would have earned in case we had invested in this mutual fund 3 months ago. We would have got the return of 1742 in the last 3 months. In the last 1 year, we would have got the return of 6695. In the last 3 years, it would have given the return of 20,529. In the next section, we will understand some alternative mutual fund that you can consider before deciding on investing in this mutual fund. So far in this video we have discussed more about small cap mutual fund from Quant Mutual Fund House. Hope you would have liked this video. If you do, please do subscribe for our channel. I will see you guys in the next video. Thanks.